Hey Zed!
Hey!
How are you doing today?
Great!
Are you free to answer some questions?
Sure!
In one word, how would you describe 2023 for investors?
Interesting.
How so?
Interesting because most asset classes in general had a great year, and 2022 was not a great year, so this was a great recovery. And if our clients were diversified in 2023, they were definitely happy.
Can you explain why global securities had a great year in general?
Global equities and fixed income both benefited from the positive sentiment on inflation. As inflation continued to moderate during the year, investors became more and more confident that rate cuts were just around the corner, and mindful of the fact that a lower interest rate environment is positive for global equities and fixed income. Furthermore, global equities benefited from the excitement on the long-term benefits of developments in artificial intelligence or AI, particularly on companies' revenue monetization, productivity, and cost-cutting.
What about local securities?
Unfortunately for Philippine equities, they didn't have the sort of party that global equities generally had in 2023. Persistent high inflation in the first part of the year, followed by moderating inflation in the fourth quarter, meant that the PSEI was basically flat year-on-year. Philippine fixed income had a better story, with local interest rates falling during the year as inflation continued to moderate.
Considering the great year for global securities, I'm curious about our global funds. Can you give us an overview of how some of them performed?
US growth did around 30 to 31%. Global market leaders did around 19 to 20%, despite of the fact that it did not have a full year of performance because it was only launched last year. And Global Multi-Asset Income or GMAI did 10 to 11%, including impact of payouts. These three funds benefited from what I mentioned earlier, excitement over moderating inflation and AI. For Philippine securities, fixed income did well, with Peso Cash Fund doing around 5% net returns.
That's very informative, Zed. I think we have a lot to look forward to this 2024.
Yes. Globally and locally, the key is whether inflation will continue to fall in a sustained manner, as this will impact when rate cuts will happen, which will then mean more positive sentiment.
With this, do you think it's a good year for customers to start or continue investing?
While it is still uncertain when the rate cuts will happen, consensus is that they will happen in 2024. And as long as our clients are diversified and not just invested in one country or one asset class, we believe there is room to be optimistic for 2024. For those who would like to plan for retirement, there is indeed reason to be happy. We recently launched Future Boost Retirement. This is a powerful solution to go beyond savings and pension for their retirement by combining the benefits of life insurance with potential for wealth accumulation through expertly managed funds. In addition, as global and local economies continue to evolve, Future Boost Retirement can help protect them in the present while preparing for a comfortable retirement. The automatic fund allocation feature allows their funds to be allocated in diversified global equity funds in the early years with higher potential for growth. But as they get older and approach their retirement age, their funds will automatically be invested in safer assets for preservation.
This is great. Let's help our customers retire ready in life.